So thank you, everybody. We're going to be talking about something very different today. We're going to be talking about the national energy markets. And this is one of those topics that most people don't really dive into, but it is extremely important when you want to acquire a property and operate a property. So we're extremely fortunate today to have Mr. Brek Clendenin with us. He's with Traditional Energy. He's a very well-known energy broker in Texas. So some context, electricity providers is very different in Texas compared to California. Over here, we don't really have much choices, right? You have PG&E and you maybe have some other smaller provider that runs on PG&E's grid. Whereas in Texas, Brett, correct me if I'm wrong, but there's like, you can get energy from hundreds of different electric providers. So services that, that Brett can provide, shopping for you to get the best electric rate can make a huge difference in the apartment operations.
That's correct. And one thing I'd like to point out, Tony, is that Traditional Energy, being the largest energy advisor in the nation and globally for that matter, we only work with your tier ones. You have the best credit backing, best pricing that has to adhere to all of Tradition's contract language, flexibility in the contracts, no monthly metering fees, and all that. Because we come from the wholesale side of the business where we're brokering $60 billion a month on average prior to COVID, we have the tremendous amount of leverage in working with the retail energy providers. So we have about 15 to 18 that we work with. The other suppliers in the market are like tier 2s, 3s, and 4s with very loosey credit. They will not hedge your energy load. They'll buy it on the open market. If the market runs up like it did last August, where it was averaging 14 to 18 cents on the spot market, that's when you'll see a lot of these suppliers go bust. So we tend to only work with the tier 1 suppliers that are going to be able to serve our clients' energy load.
Cool. Okay, yeah. So, Brek will be able to go into more detail on what the market's like. And, I think, when shopping for different electricity rates, I learned way more about coal, hub, load zones, all these terminology, way more than I thought I would have to. But so share the knowledge and have everybody become a semi-expert. Cool. Let's go ahead and get started. So, here's a brief agenda for today. So what I'd like to do is every time that we have one of these meetings, I'll give you guys the latest market update. Things are so fluid now in the COVID environment. So it's always good to know what are the latest changes. We'll also go over briefly about how our commercial properties, especially residential multifamily, handles their utility billing and why this is so important for us to look at. And then Brek will go into detail. We're actually also very fortunate that Brek brought his fellow colleague, Mr. Gary
Cunningham,
and to give us an overview of the current market. He is a director of market research, and he'll be able to share with us more information on that as well. And finally, we'll close out with a small future outlook for the current market. So some very short legal disclaimers. We're not brokers, agents, not providing any advice. This is really just for educational purpose for everybody. And if you're interested in learning more, and if you want to be on the list for our future apartment deals, please feel free, join our email list at linkmultiinvest@gmail.com. And, for those of you returning, please give us a like on the meetup if you like our content. And, we love to bring more guests such as Brek onto us to give us, the expert knowledge, right? So I think we had about 6 to 7 different guests coming to our meetups already, talking about anything from loan to getting deals. So, we cover a pretty wide breadth, and I think it really helps everybody. Cool. So very So who is Link Family, Link Multifamily? So we're basically a large group of investors concentrating on investing out of state. So far, we have acquired about $35 million worth of apartment assets, 350 units. And within the group, we raised over $6 million to acquire these properties. And we're definitely planning to do even more. So my name is Tony, Tony Lin. So I come from a background of a software engineer. I love pre-IPO startups, and so I have a aversion for large companies. I like to be in the trenches and fighting on the small startups. So, but later on, while looking for where to park my money, where to get a good return on, our funding, I discovered apartments and saw that why it provides such a great return. So started focusing on investing and researching apartments and everything along that line. So with me, investing with me is my longtime partner, longtime friend, Dave Lin. Dave is also has quite a real estate portfolio, including in Austin, Texas. He has multiple fourplexes there, and also is looking to acquire more. As you know, Texas is extremely attractive right now, especially with a lot of large companies moving there. And Tesla just announced that they're going to be building on the outskirts of Austin. So it's a great state to invest in, and much better than what we can get here in California. So together, we have invested in a lot of other deals. And for me personally, I invested over 3,000 deals, 3,000 units, and Dave is something similar. So we have a lot of exposure to a different type of multifamily syndications. So these are a couple of properties that we have acquired over the past couple of years. First one is Encore on Mustang, is 218 Class B in Grapevine. That was bought for $23 million. And we also bought Arbor Terrace in Arlington. And that one was 143 units that we built 3 additional units into. So it's actually 146 units. It was acquired for about $11.7 million. So for Link Multifamily, we're a group of investors, and we form a partnership partnership LLC in order to acquire these assets, right? So there's 2 general classes of investors, right? So there are the general partners who are active investors who actively work on the deal. And then majority of people are the limited partners, the passives, who really just contribute funds, join on the deal, and don't have to really do any work and get a lot of the rewards and tax benefits. So, I made a quick chart to kind of show, okay, so what is the role of a general partner? General partner basically goes and find deals, talk to brokers, negotiate on assets that look good, and then also is responsible for purchasing and closing the assets, right? So usually when we buy these large multi-million-dollar deals, you need to put down some earnest money. It is the general partners that need to do that. So the earnest money could be anywhere from $200,000 to $500,000 upfront, and it is a general partner that put these down. If the deal doesn't close, the general partner lose that money. So the leads take on a lot of risk. We also sign on as a guarantor for the loans. And we also contribute, we contribute money into every single deal that we do. So we feel it's quite important to have skin in the game in every deal that we do. After we acquire the asset, the general partners are responsible for managing it for the life of the investment. And that's anywhere from 5 to 7 years or earlier if it already has extremely good returns. So And then the benefit is that everybody is able to take a share of the profit as well as the final asset appreciation, right? And everybody is able to enjoy the tax benefits that come with investing in such a large asset. So you'll see that, as a passive, you really don't have to get involved in the daily operations. You don't have to get involved in the acquisition of the asset. It's really, you're joining as a group to fund the purchase and yeah, really just sit home and get checks. So there's a few reasons, I think a lot of us already have rental properties or single family houses that we buy. So why invest in apartments, right? The number one reason is you're scaling up to really institutional size deals, right? And there's so much more benefits that comes out of that. Stability, economy of scale, the tax breaks, and cash flowing on day one, right? All these are benefits of, scaling up to something much larger. And one of the main reason why I invest in apartments is the fact that they're very downturn resistant, as we have seen in the, currently in COVID, right? So for apartments, the average collections for the last 4 months under COVID has averaged over 90% for just about every asset that I have invested in. The reason is, in the end, everybody needs a place to live. So doesn't matter if you're no longer shopping, doesn't matter if you're no longer going to the office, whatever. In the end, they pay their rent. All the stimulus money, first thing that they go to is they want to make sure they have a roof over their head. So that's why I invested in apartments. I didn't think that we would hit a recession so quickly, but this further proves a thesis that apartments are so downturn resistant. I mean, still over 90% occupancy, still over 92, 93% collections. I mean, it's as if nothing has happened. Okay, so we like to acquire properties that, we have an opportunity to go and improve. Okay, so typically we acquire either B class or C class. Those are properties that's anywhere from 30 to 60 years old. And we can renovate the interior and be able to rent it out at a much higher price. So after renovation, we're able to, achieve a renovation level like this with granite countertop, black appliance, backsplash, vinyl, the wood-like flooring, everything like that, right? And to renovate one of these units, which is like close to 1,000 square feet, the cost is only $3,000. So when you do things at scale, all your materials, all your labors become much, much cheaper, right? I mentioned this before. Things like this granite, this piece of granite, for an 8 feet piece of granite, it's only $99. It's incredibly cheap at scale. So here's a quick overview of what we have seen in the recent economy. Definitely continue to be challenging, right? So the last time we talked earlier this month, the economy was starting to open back up. Texas was actually opening back up. Restaurant was up to like 75% capacity. But since then, with the virus cases spiking, things have started to close back down. I think Texas is back down to about 50% capacity for restaurants, and bars and other places have closed down once again. So the latest economy figure that came out, the GDP actually dropped 32%, which is quite significant, which is the biggest drop we have ever seen. Surprisingly, that 32% drop is still better than what many analysts were expecting. They were expecting something even worse than that. Unemployment overall is kind of holding at about 11.6%. And right now the entire focus is on the second stimulus package that Congress is currently working on. The Republicans already have a version of it that they're ready to come out with. And the Democrats are basically saying it's not enough. So, we can kind of look at the Republican version as the minimum that will be coming out, with Democrats potentially pushing for even more stimulus than that. Okay. So, we're cautiously optimistic that this will continue to help our tenants, and for future apartment occupancy, etc. This definitely helps us maintain, and why our collections have been so good. It definitely have an impact. So, we're really looking forward to see what is this new package that's coming out. So this is what is currently under discussion. What the Republicans have proposed is another round of $1,200 per person. And this is a one-time distribution, just like last time. So, if you have a 2-people household, that will be $2,400. If you have children, I believe that's about $600 each. So for a household of 4, easily you're looking at $3,600 extra a month, right? Just on the initial month. So that goes a long way. And there's a recent study, when they receive this money, what do they put it toward first? Housing. Nobody wants to be evicted during this time. The unemployment assistance is going to be extended, although it may look very different than the current $600 a week extra that everybody's getting, right? Which I thought is kind of ridiculous, right? So $600, if you're on unemployment, $600 extra a week, that's $2,400 of extra income, might be more than what somebody else was already making. So there's very little incentive to go back to work. So right now, what the Republicans are proposing is limiting that to maybe 1/4 of what it was before, and making it as a percentage of the person's original income. So there will be continued unemployment assistance. We'll see what the final amount will actually be. Now, with good, there's obviously bad. So they expect to also continue the eviction memorandum that they have ongoing. So this prevents apartment operators like us to be able to evict tenants if they don't pay. And that causes a lot of heartache for us, right? Because we lose the main tool we have to make sure that people pay on time and, follow the rules, and, to make sure that they know they cannot game the system, right? So the eviction memorandum was actually in place for over 3 months. It just expired, but that doesn't mean that you can evict the people right away. There's rules. You have to do, instead of a 3-day notice, you now have to give them a 30-day notice. Within the 30 days, if they give you any proof that they were affected by COVID because they lost a job or they were actually infected, you have to give them another 30 days before you can file eviction on them, right? So if this eviction memorandum continues, it would definitely make it difficult to collect rent. But the government is trying to offset that with these extra stimulus so that the landlords will still get paid. It also has protection for COVID-related lawsuits so that employers won't be subject to these COVID-related frivolous lawsuits. And last time, for small businesses, the government also provided what's called Payroll Protection Plan, PPP assistance. This was huge. This was actually quite huge. It helped a lot of small businesses and restaurants keep employees around. For example, on our apartments, we originally let 2 maintenance guys go, but because we received this PPP assistance, we were able to hire them back. So, on our property, it helped us to a tune of over $30,000 in payroll assistance. So it's quite significant. And it is very effective in keeping people employed. Okay. So short-term interest rate, the Fed also just said that, yeah, they're gonna keep it at 0 or near 0, 0.5, 0.25. So while that's good, it definitely impact retirees who rely on a fixed income, because they live off of the interest that their retirement fund generates, right? So a lot of them, for a lot of those people, some passive income from cash flows from apartment deals such as that becomes very attractive, because then that's a long-term cash flow that pays out to them. Right now, the banks are just not giving them anything. So, so what is the impact to apartment operations? Surprisingly little. So, across my portfolio, collections have remained strong. So if you see March, if we use March pre-COVID as an indication, we had about 8% drop the first month. But part of that is due to you're not able to collect late fees anymore. And late fees accounted anywhere from 3 to 4% of income, right? So the drop is really very small. We were going after the contingency of what happens if the collections drop to 60% of original. And we believe we could survive for 12 months, even at 60% collection. But right now, if you just take a look at the last few months, collections have been improving. We're at 96, 95, 96% of what we were in March. That's basically the same, right? It's just without the late fees. So fortunately, now that the original CARES Act provision has expired, we can start once again charging late fees in August. So we'll definitely do that while we can before the new CARES Act comes out. So the COVID is actually helping us to get extremely high renewal rates. I think monthly, over 70% of the people are renewing. Everybody's staying put. Nobody is trying to move. Nobody is trying to, it's just not the thing to do right now, right? So whereas normally you see a 40 to 50% retention per month, we're now seeing like majority of our tenants renewing. And we're still able to charge maybe $10 extra per unit when we're renewing. So I think the last few months, 70, 80% renewal rates. It's extremely good. So also very good occupancy, 92, 95. Some of my investments in nicer areas, very nice areas, in fact, are like, could be 95% or more. Okay. So the eviction memorandum expired on the 24th. It expired last Saturday. So from now until the next CARES Act come, we have a small window to file all of our evictions, right? Good thing is, as soon as you send those notice of eviction out, notice of your intent to evict people, we got a lot of people paying and catching up on their payments. So our delinquency actually went down to like 1%. So without having to evict them, we were able to get the best. And what is the impact, right, to new deals, right? So this has the lenders are being extremely careful right now. So I think everybody is wondering, are we gonna see a large discount, fire sale on all these commercial assets, on the multifamily apartments, and we're getting the cash ready so we can pick up like things at rock bottom prices. And unfortunately, we didn't see that. And the reason we didn't see that is because apartment has continued to do so well in the downturn that there was very little lost revenue, and the business model remained pretty much the same. So it didn't warrant any large drops in prices. For properties that actually went into trouble, Fannie Mae and Freddie Mac offer what's called a forbearance program. Forbearance program is basically a pause on your mortgage payments. It doesn't nullify. You still have to pay your mortgage, but you get to delay the payment for 6 months, for 3 months, for 6 months, whatever it is. Okay. So this way you get a temporary breather until the economy improves. But even then, the forbearance rate is extremely low. It's only about 1.3% for Fannie Mae loans, right? So only people who under forbearance and fail would you see a fire sale on that property. So as you can see, the amount of people even taking forbearance is so low. So yeah, you're not seeing too many things at a huge discount there. However, other commercial properties are hurting really bad, right? Retail, right? It goes without saying, retail is doing extremely bad. Office is feeling a lot of pressure because with so many workers working remotely, people no longer need to lease such a large space. Senior living has been hit extremely hard due to COVID. Hotels, hospitality are doing bad for, I'm sure you guys all realize the reason. So to protect themselves, lenders such as Fannie Mae and Freddie Mac started requiring a larger reserve before they grant you new loans. Okay, so they wanted you to have 1 year's worth of principal and interest, property tax, insurance, all this good stuff locked away so that they know you can survive the first year, right? That means you have to raise a lot more money. That means the overall return on deals is a lot lower. So after a while, they looked at apartment performance. They realized there's a lot less risk. So they reduced a lot of the escrow requirements. You no longer have to escrow property tax. You no longer have to escrow insurance or your repair reserves. You still have to escrow about 9 months worth of mortgage and insurance, but that's already a lot better than before. So another thing we're seeing in the market is there's not many people willing to lend for what's called bridge financing. So bridge financing is basically when you're acquiring a property that's in pretty bad shape, right? It's only has 60% occupancy. You need to dump like $15,000 per door to fix up a lot of stuff. Fannie Mae and Freddie Mac doesn't want to lend on these type of risky deals. So typically you rely on a bridge financing, which is like a 2-year bridge that give you some money to finish a renovation. And then once you stabilize a property, you can refinance into a Fannie Mae or Freddie Mac agency loan. But not many people are willing to take this risk right now because you just don't know whether or not after they finish the renovations, are they going to fill it back up with people who's willing to pay the higher renovated price? So it makes it extremely hard to do new construction or to purchase old and worn down buildings. So right now, the focus is still mostly on properties are stabilized and able to cash flow day one. So here's a quick overview of what the financing rates look like right now. We typically go for what's called tier 2. So that is basically a loan amount of 65% to 80%. 66% to 80% is what we call tier 2. So you're able to borrow up to 80% of the property value. You need to maintain something called 1.25 DSCR, which means that your income must be at least 1.25 multiplier of what you had to pay in your mortgage expense. Okay. So rates are actually pretty good. I mean, typically we like to go for like a 10-year or 12-year fixed rate. And those are extremely low. I mean, 3.1%, 3.2%. It could probably go below 3% if you go for green. So rates are extremely attractive right now. Now, of course, if you're willing to put more money down and only finance up to 65%, the rates get even better. But when you put that much money down, your overall return reduces. Okay, so and that brings us to energy pricing in apartments. So during this COVID timeframe, not only are we making sure that we're able to lease out the units, maintain the current occupancy and collection, we also focus heavily on how can we reduce the current expense, so that we can make sure we can save even more money that we can stash away for the rainy day, for the next half year or year, right? So out of a overall apartment expense, utilities is quite a significant portion of it. So if you look at this brief breakdown, usually your expense for any home or large apartments, you want to estimate about 50%, expense of your income should go to expense, okay? So for our properties, this is typically what it looks like, okay? Office expense such as advertising, just running the office, materials, etc., probably running about 5%. Payroll, okay, payroll is quite significant. It could be 10 to 12% of your expense. Maintenance is basically fixing little things as well as getting units ready. When somebody move out, you have to clean it, and then getting that ready. So that's about 5%. Utility is second biggest, okay? So that accounts for 11, sometimes 12% of your overall expense. And your taxes and insurance accounts for the biggest part, right? So property tax in Texas is very high. And so, but you don't have control, you don't have too much control over the property tax, but utility, if you're able to get a good pricing on utility, this would make a huge difference. Okay. So for commercial properties, there's different ways that they're metered, and so some older properties will have what's called a master meter. So basically, for the entire property, even if it's 200-300 units, there may only be 4 meters for the entire property, and those typically get charged to the apartment, and then the apartment would charge back the residents for what they're owed, right? Another way is, individual meter. Basically, each unit have their own meter, and the residents basically pay for their own electric bills. So in that resident billing case, each resident pay for their own billing, and then the apartment is basically responsible for paying the common area. So things like the clubhouse, the office, the outdoor lighting, and the pool, etc., right? And resident paid themselves. When it's master meter, you can do what's called RUBS, right? Ratio billing. So from the master meter electric cost, you bill back to the residents according to their square feet, according to how many residents are in the building, okay? And because the apartment is now negotiating for the electric price as a whole, the apartment can get a much better rate because it's a much larger electric usage, right? So you can pass on the savings to the residents. You can do that both the resident building and RUBS building, right? But when you bill back the residents, you can charge some administration fee, etc., and that could be extra income because you're handling the billing for them. Okay. So with that, I'd like to welcome our our speakers for today, Mr. Brek Clendenin. He's a senior energy advisor. He does provide a lot of brokerage services when you're looking for energy and electric rates. He works for Tradition Energy, one of the largest in the world, actually. And along with his partner, colleague, Mr. Gary Cunningham, Director of Market Research. So, welcome.
Thank you, Tony. I appreciate it. That was very educational and a lot of the same business aspects that we're accustomed to. And obviously working with commercial real estate, multifamily, governmental entities from large, small to medium-sized businesses across the globe. We have a very in-depth understanding of how you guys operate and how we can assist. So a little background for everybody on the call. I joined Tradition Energy in 2011 after having spent more than 17 years working in a variety of operational and key account roles. I've assisted with small, medium businesses, large commercial, industrial. I deal with a lot in the government space. I've worked for TXU Energy, the largest retail energy provider in the state of Texas. And I've also worked with Direct Energy, who is one of the top retail energy providers in the United States. So at Tradition Energy, as a senior advisor, we help with unmatched teams in the industry that I'm able to bring extensive knowledge and expertise in both the retail and wholesale side of the markets. Along with all my teams, including Gary Cunningham, who's obviously going to be on the call with us today to go over the energy market outlook and talk about some other market drivers. I've got a pricing team in Stanford. We've got client services. We've got national account management, all of these to help with your business needs. And personally, I've assisted over hundreds of clients across the United States achieve all of their energy procurement goals with the help of these experts. So us being involved in the wholesale energy markets is going to allow us to, help you guys in terms of dedicated services, from the best pricing, market research, and anything else that you need regarding bill payment, bill processing, and other services that you guys want to cover. I looked on the agenda and I'm reading that you want to Tony, you wanted us to talk about other services offered. So we'll go over that in the presentation, and we're going to make it quick as we're a little bit behind schedule. I know Gary's going to be on here in about 10 or 15 minutes to discuss our regional, our energy market forecast for the remainder of 2020. So with that, let me give you the background of Tradition and who we are and why we're here tonight to discuss our business with you. So Tradition Energy, we're here to obviously help you guys with improve your operating results, right? So our goal as a company is to become your trusted energy advisor. We do this by building a long-term working relationship with all of our clients. And basically, at the end of the day, what we want to do is provide you with all of our resources that we have and help identify ways that we can improve your business process and move forward on, to next steps in terms of making sure that we're lowering your cost and doing all that we can to mitigate any further risk to your business operational needs. Okay. So who is Tradition Energy? Tradition Energy is the largest and most experienced energy procurement advisory firm in the nation. As Tony mentioned, we're global. We're in every major deregulated market across the United States. I'm in the Dallas office. We have a Houston office. All of our operations are in Stamford, Connecticut. That's where you'll have our national account management team. You'll have our pricing team. We'll have our client services team and account management. We've been in business, guys, since 1986, and we're one of the largest in the world. And over that time, we've grown to more than 80 professionals, obviously in the 7 markets that I mentioned, and you would have unmatched support backed by our primary market research team, and that's with Gary Cunningham and his team to help you guys be positioned in the wholesale market with advisors like myself and anybody else on my team every step of the way throughout the whole entire procurement process. Okay. That takes me to our strategic solutions at Tradition Energy. So when we're looking at your energy load, whether it's in Texas or Illinois, which is deregulated, or in the Northeast, or Maryland, or possibly even California, in some instances, we want to sit down and understand what your risk profile is and what your procurement objectives are, right? Understand what it is you're trying to achieve and collectively craft an appropriate procurement strategy. And we're going to bring all top tier 1 suppliers together to compete for your business through our customized pricing platform, which we'll get into a bit later. All right, so I know that's a lot to understand in terms of an intro, but I want to make sure that we take a break here. And I think this is a good spot to stop Tony and ask if there's any questions or comments that anybody would like to speak up on in terms of what we've covered so far.
Yep.
obviously they can funnel those questions to you, and feel free to stop. This is more conversational than anything. We want to make sure that this is very interactive and that we're answering questions for any of the attendees that would like to ask a question. Okay.
Yeah, so for everybody, so this is quite a a deep topic as well, because so we'll be introducing some concepts about like, okay, how is energy generated, the sources, like is it going to be coal, is it going to be solar, etc.,
Right.
and how the electric is actually delivered to you guys. So if you have any questions along the way, please feel free to ask.
Thank you. So I also saw, Tony, on the agenda that you wanted to discuss other solutions or value adds that Tradition Energy offers.
Hmm.
So we offer bill payment and bill payment processing services, right? For a fee of $7 a month per meter. That may be something that some of these individuals on the call may be already participating in, but just know that that's something that we can do. We also offer a bill audit service and tariff rate analysis. For tariff rate analysis, we can look at stuff outside of the regulate or deregulated markets, right? To make sure you guys are paying the right rate and that you're not being overcharged. Um, we offer demand response. This would probably be more tailored to a larger client, or if you had backup generation, which most multifamily assets and apartments do not have. But we do offer, assistance with procuring a program that would help streamline some additional revenue if you were to be able to go off grid. I think it's just additional services that we offer to all of our clients. We could obviously help out with efficiency projects. You mentioned a lot of these properties may be 40, 50, 60 years old, so we would be able to intervene and inject our expertise into helping you guys reduce your energy consumption through various other measures. Are there any sustainability goals or anything internally with you or anybody else for any of your properties that you can think of?
That's actually very interesting. We haven't thought about that.
So,
So, for some of our properties, we have flat roof, and I wonder if solar for carports or roof are those options?
yeah, absolutely, they are. And in our earlier conversations, Tony, we had talked about Tesla, and one of the opportunities that I assisted with here in Dallas County, they do offer those type of projects and programs for rooftops, carports, or even smaller projects of scale. That's something, if there's an interest, especially with a lot of investors that are in our Texas market, coming from California and other states that are extremely green. Those are some topics that we can dive into deeper on a later discussion if we wanted to hold another small meeting or have a conference call. That's something that we can discuss in detail.
Sounds good.
Okay. So, and then working with Tradition Energy, during our entire process, our onboarding process, loading your accounts, getting everything set up, the whole post-contractual stuff, we have a dedicated client service team that would ensure a very smooth transition, that all the accounts are set up as tax exempt as they are with your type of industry, making sure that all meters are switched appropriately and that everything starts in and on time. Through the life of the agreement, Tradition Energy is extremely good about staying in constant communication with you. In fact, if we're not talking to our clients at least once every 90 days, we're filling ourselves and we're doing a disservice to our clients. So we're basically following the energy markets day to day and reaching out anytime there's a procurement opportunity to save money. So even though you may be in an agreement for 2-3 years on a specific asset or a group of assets, even as soon as this contract's signed for day one, day two, we're already looking out for your next best opportunity, right? So we can price that with the incumbent supplier or take it to the market and find the next best opportunity for you. We have daily and weekly market reports that can be funneled to anybody and everybody that's associated with working with Tradition. We also have biannual energy market forecasts and other reports that come from Gary and his market research team that will provide education. All right, we do this throughout the entire year. In fact, we host over 20 plus webinars in a given year, and especially this year with COVID, we've seen quite a bit of ramp up in hosting webinars to make sure we're staying in front of our clients, assisting our clients, and just making sure that we're able to help them and answer questions in this time of need. We have a couple of seminars a year, one in the beginning of the year, then we'll have one in the middle of the year. Obviously, when there's not a COVID situation going on, where we can have guests all together in one environment. These would be hosted regionally from Dallas, one in Houston, Illinois, Chicago, Illinois, Stanford, Boston, perhaps even New York. Throughout this entire process, just please know that me and my teams are working with you, and we're working with all of your colleagues to make sure that our resources ensure that you have the absolute best procurement strategy in place and at the right price. Okay. So that leads me to next. Let's get to why clients choose Tradition Energy, because I know on the agenda there was a topic of why use a broker. More specifically, why use a broker and why choose Tradition Energy. We have over 30 years experience, been in business since 1986, right? Personally, I've been doing this for 20 plus years. I know Gary's been in the business for 20 plus years. Tremendous amount of experience and expertise with all of our employees. We hire the best of breed, and we're able to obviously deliver on our clients' request. We have unique market intelligence derived from our position in the wholesale institutional markets. This obviously is going to result in the best timing of pricing, content, market direction. It's going to give you great opportunities to understand what's going on in the markets and really time the market at the appropriate time with the right price, the right product, and with the right supplier. Does that all make sense?
Yep.
And please know that Tradition, we're unbiased and we're transparent in everything that we do, right? We're going to bring all of the top tier 1, perhaps some tier 2 retail energy providers in the market, whether it's here in Texas or any other market that I mentioned, to compete for our clients' business. Obviously, with the leverage that we have in the marketplace, we're going to make sure that we put you with the best supplier and get the best terms and conditions put in place for any of the folks on the call.
Yeah, just to give some context. So, when our team go and we're looking at a deal and we're looking at whether or not, one of the first things we look at is the utility contract expiring? Do we have the opportunity to negotiate a new price after we take over a property?
That's a very good question. Yeah.
Yeah. So, this is extremely important to me and to asset managers. So we would engage somebody like Brek and, basically ask him, hey, what do you think the electric pricing is going to look like over the next few months, right? Because it's quite seasonal. During winter, during summer are very different rates. We would ask Brek for advice on should we try to lock the rate now? Do you think that it's going to go higher or lower? And because once you lock, you typically want to lock for 3 years, 5 years, etc. Right? So having Brek's experience in where the market is trending is extremely important. So we can try to lock in a good price if it is good now, or hang out and wait a little bit longer. So we would approach him and then we would get quotes like, okay, this is how many cents per kilowatt, and and then Brek basically would give us weekly updates and assist us in actually locking in the rate.
That's correct. Obviously, timing is everything, and Gary will get into this a little bit more in detail later, guys. It's so important to be fully educated and engaged with the market trends where your assets reside. If you're educated and understand and are in constant communication with the energy advisors at Tradition, we're going to be able to guide you through all the complexities and really educate you and time the most appropriate procurement for your energy load. And I've got to be honest with you, I've got clients that don't expire for 2 or 3 years out. And based on trends, past, present, and future, if there's an opportunity based on coal-fired plants going down or nuclear plants going down, that's going to affect your short-term pricing. And so what we want to do is be ahead of the curve, right? And so if this is going to impact the next year and a half, 2 years, and you expire in 2 years, why wait? let's go ahead and start pricing this out and start benchmarking those opportunities and find an optimal time and price in the market to where you could hedge your energy rate and mitigate any further risk. Okay, and so our teams are very well equipped, very educated, and we have a tremendous amount of suppliers, that we work with across the nation that we can provide these reports to you, like you mentioned, Tony, as frequent as a week at a time, or we can obviously jump into our Tradition Energy account management software tool and pull reports to show you the market trends week over week, just to alleviate some of the strain on our pricing desk as we're working on 50 to 60 deals a day. So anyway, with that, we can move forward. You can scan through the next couple of slides here. We'll go to, let's see, we'll jump forward. There we go. So experience, we talked a lot about who we are, what we do, and why work with us and all that. But tradition, you can back up a little bit to experience. There we go. So, there's no other firm out there in the United States. And, for, talking about the whole world, obviously you're going to find very few brokers that are like us and that can get the opportunities completed as a tradition, right? So when you're working with somebody, you want to work with a Tradition Energy that's in every market and that's able to bring best practices that each of you will benefit from, right? So our extensive experience advising clients, like you see here in this slide, is obviously going to be something that we can bring to you. The scale of our business means more suppliers will compete for your business. And we're working with, what is it, Gary, 80, 90 suppliers currently in the United States. And then I would say over 150 plus worldwide. And one stat that I'm very proud of is that we're continue to price over 500 million kilowatt hours on a weekly basis. Now, guys, even though we're large and one of the biggest, most experienced and all that, just please know that we're not going to get you, you're not going to be lost in the shuffle. You're not going to not be taken care of. We've got a 15 to 1 client to professional ratio, which means you've got me, and if I'm not available, you'll have my teams, you'll have Gary, his teams, all the way up, all the way up to corporate in terms of support. And one other statistic that we're extremely very proud of is the proof that 95% of our clients all across the United States, 1,300 plus, say that we're making a very positive contribution to their energy, their budgets, their business, everything. So that's a huge number, right? So I'm sure most of you may or may not work with somebody, but I'll tell you that in our 14 years of being in business, to have that type of success rate is extremely, very proud of that. Okay, so we're moving on to wholesale market knowledge and expertise. I'm sure most of you, Tony, you probably do as well, receive information from whomever it is you're working with, whether it be the supplier or a broker, consultant, somebody that's providing you with some sort of market intelligence or some articles or some link or something that makes you feel like you're being educated and understand the markets, right?
Yep. I also read your weekly energy report religiously.
Well, good. We're appreciative of that. Obviously, it comes out every Monday morning, and anybody on the call or that listens to the recording can reach out to me, and I can get you signed up for our weekly energy weekly market report. It covers both bullish and bearish technical and fundamental drivers of the market, short-term and long-term, right? So again, we're unbiased. We're going to make sure that we're providing with, both sides of the market there. What's causing things to go up, what's causing things to go down, and what areas, short-term, long-term. All right. So, tradition, we obviously take our research extremely serious. In fact, it's multiple times a day that we're talking with Gary and his team about certain market topics, what's moving the market, what's driving the market. And all of this obviously is going to help you guys and anybody else in the call just to better time your decisions when and how you're procuring your electricity, right? So if you look at the slide here with the gentleman with the circle around him, this is Tradition Energy. This is our office. This is us in the middle of work. This is our position as a intermediary, if you will. We're in the middle of the daily flow of everything that's going on in energy markets. Okay. And please know we're all completely unbiased. Our research team is going to provide you with information that they get from talking with other global outlets. And our intelligence is not just Tradition's opinion. It's not a supplier's opinion. It's not your broker's opinion. It's not your friends or neighbor's opinion. It's truly the market. Right, the market's telling us this is what's going on. So we disseminate all that information through all these different reports, and obviously you get that one on Monday, and it's a good report. But there are obviously other reports that come out, monthly, quarterly. We do the webinars and seminars. All of this information is our primary information. It's our market research. It's Gary and his team's information, and it's the foundation of our procurement for our clients' decisions and how and when they execute their electricity contracts. Obviously, I'm going to be here to help. I'm going to give you information. I'm going to steer you one way or the other. We may hold off. We may renew early. If there's an opportunity that we can capitalize on, I'm going to provide you not only just with my knowledge and my team's knowledge. We're going to back it up with market detail and visuals and charts and graphs and market outlooks. Okay. Everything making sense so far?
Yes. Yeah.
Okay. You can flip to the next slide. This is a really fun one, and timing is everything, right? With buying an asset like you guys do, to selling an asset, to we didn't know COVID was coming. If we could have liquidated an asset at a profit, we probably would have done that. If we would have known COVID was coming, we might not have entered into that energy agreement. There's all these different variables that's happening all day, every day, and so it's not uncommon for us to see in the energy markets major swings, as we're seeing here in the graph. The energy markets, specifically natural gas, is the most volatile traded on any exchange, period. And so it can make an extremely large impact on your overall budgets. And as you can see here in the example, we don't have to focus on the dollar decatherm, but do focus on 5 mil kilowatt hour. That's a half a penny per kilowatt hour. So if you're paying 5 cents per kilowatt hour, and you're trying to strike a 4.5, that's 5 mils. That's a half a penny. And say your load is 8,000. Maybe it's term because you're multifamily and it may only average 2 million. That's a significant swing in your energy budgets, anywhere from $45,000 to $80,000. And if we can keep you in the market when you should be and out of the market when you shouldn't be, which is our job, obviously we can impact your budget significantly. And that's something that we're working with our clients on daily. Like I said, we're running 55 plus RFPs a day and pricing 500 million kilowatt hours every week. So we have a very good pulse on the markets. Next slide. All right, this is our reports, right? So again, Tradition Energy puts together their own material. All of this material and all these various reports, from daily to weekly, which is the weekly report you get, Tony, the second one, our biannual forecast, price forecast, which was a week and a half ago that Gary will speak to in a moment, to market flashes, the big items that pop up, tomorrow, or some plant goes down, or some big news event. We're going to send out a market flash to participants in that specific market that has assets, right? So we're sharing information with you that's our information through all of these reports every day. We're always going to work with you based on whatever it is in terms of your level of interest. If you just want daily, you want weekly, whatever, let us know. We'll make sure that you're getting the reporting that you need to keep you educated so that you can make the best informed decision for your business, for your investment as you go forward, okay? Now with that, we've recently incorporated what we call a regional market outlook. It's an RMO that we accompany with all of our pricing reports. For, say, you've got an asset in Dallas, Texas, or Houston. Austin is regulated, no opportunity there, but say it's in Dallas, Fort Worth, or the Houston region. We are going to have Gary and his team put together a fresh regional market outlook that is tailored to that market, giving you, factors in terms of what's driving the market, good and bad or neutral, whatever it is. We are going to educate you every time we pull a RFP or pricing report. We're going to accompany that with an RMO, a regional market outlook. All right. This is basically going to serve as what we call a blueprint for any procurement strategy. So you have something in your hands. All right, so this is what's going on in the market, whether it's Texas or Illinois or anywhere in the Northeast where it's deregulated. This is going to help you understand what's driving the market, if you want to go short term, longer term, and if you want to procure at a certain rate or whatever it is with a certain supplier with certain terms and conditions. This is your roadmap. All right. So with that said, the report is obviously fairly new. We've been using it the last couple of years, and it's been very well received by our clients. In fact, I use it daily, and it's been very well received. 95% of clients, I would say 100% of my clients, really appreciate this. It's worked out. It's helped them. It's helped groups of people. In fact, today I just finalized a large independent school district on a 10-year contract that a regional market outlook was created for, I would say, on a monthly basis, just to make sure we had them in line with what's going on in the market so they could make the best decision they could on behalf of their taxpayers when it comes to procuring electricity for the school district. Okay. All right, this takes me to our pricing system. It's another great topic of discussion, as our traditional energy pricing system is, we've spent a lot of money on it in recent years and really enhanced it and made it very robust. And I'm very proud of this system. It keeps suppliers honest. It keeps them extremely competitive, and it generates a lot of competition. So as you look through this graph here, you'll see on the left-hand side just a numerous amount of suppliers. The legal entity name would be populated, what commodity we're pricing, states they serve, all that. So, yeah, when we obtain all of your energy load through the utility, we would upload it into our TEP system, and our pricing analyst in Stanford would send that out to all participants that are, I would say, best suited to serve that energy load, and have them, compete for your energy load on based on whatever terms and conditions that we're asking of. So we're gonna find the best term. It may not be a 1 or 2 or 3 or 4 year. It may be an optimal term, somewhere a sweet spot on the curve that we can identify that's going to shave off 2 or 3 tenths of a penny per kilowatt hour, right? Times your annual energy load, that's going to save you thousands of dollars. And so by increasing the supplier participation, we're reducing the transaction cost for you, our client. This system allows all suppliers to, some call it a reverse auction platform, some call it a pricing tool, whatever. I like to look at it as it's a reverse auction. You got everybody supplying their bids on a set day and time for terms that we're asking for. And at the end of the day, we're going to narrow it down to the top 3 or 4, and then we're going to start negotiating with them. We're going to continue multiple iterations of pricing requests, and we'll start pulling contracts and make sure that the contract is tailored to your type of business and has all the flexibility in it that you need, right? Basically this tool that I'm talking about, it just ensures that everybody's apples to apples, all the terms and conditions that we're asking for, everything that we need to present to you in a pricing report, along with that regional market outlook, basically translates to what it is that's going to serve your account, right? Does that make sense, Tony and everybody?
Yeah. So, yeah, exactly. So basically, he's able to arbitrate and look at the top energy providers on who can give us the best rates, right? And um, definitely a longer term that you go, the cheaper the rate would be. But then it makes it harder for you to adjust in case the prices drop, right? So it's really a lot of information from Brek to figure out whether or not do we expect it to drop 4 years from now? Should we go for a 3-year term, 5-year term, or just 2-year because we think the energy price is going to drop pretty quickly? So yeah, and this is why we use energy brokers. It's so much domain knowledge that we don't have as an asset manager, and they're able to help us a lot in these utility pricing.
Yeah, you're right. And there's just so many moving parts and variables that, being the most volatile commodity, natural gas, which obviously, natural gas is generated, you use a lot of natural gas to burn at the power plant level to create electricity. So you got a lot of volatility. You've got coal plants down. I know we've talked about that in the past. When they get retired, which Gary will talk about, obviously it puts a lot of upward pressure on prices. Texas being a very fast growing state, largest state in the lower 48 with record growth year over year over year, puts a lot of upward pressure on power prices due to demand. And then you got LNG and all these other things that happen. So, we really got to take that in perspective and look at it, right now, present time, 2, 3 years, 4 years out. And we have all that intel in-house that tells us basically how things are trending. So we can say, look, client, if you own this asset and it's yours to keep, and you may have it for 3, 4, 5 years, we look at that. And if it's a short-term hold, we'll look at that too. And if we need to put you on a product that has more flexibility to opt out of that agreement, we can do that too. And please know that every agreement that you ever enter into through Tradition Energy with any of our suppliers, you have the ability to, let it transfer or assign it over to a new buyer. And obviously, if we're capturing the best pricing for you over any other broker in the marketplace, what new buyer is not going to want to take advantage of, acquiring that energy contract, right? So please keep that in mind. Next slide.
Yeah, I'll just make a note that when I first talked to Brek, it was actually very interesting that, with us Californians, we're always pushing for greener energy, but you actually end up paying for it in the form of all these coal power plants closing down. So as soon as one of these, whenever I talked about the pricing, it's like, oh my God, it went up because they're shutting down 2 more coal power plants.
Yeah.
And available energy.
Yeah, utilizing more natural gas, clean burning fuel, renewables and all that, and getting rid of, coal-fired, some nukes in other markets. Yeah, it has an adverse effect on power prices, and those are things that you have to be aware of. So let's see, where are we at here? Tradition. All right, so this is our unbiased and transparent. This is a pricing report, basically. At execution of your contract, we want to find you the right price, and the right price is in the yellow highlights. If you look at far left column under Constellation Energy, one of the largest retail energy providers in the nation, one of our top suppliers, they're winning the 12-month. They're not winning anything else. NG, or the 24-month, MP2, which is owned by Shell Energy, 6th largest company in the world by revenue. They are winning that one. So on and so forth, all the way out 60 months. You can see that all suppliers are just not equal in terms of being the best in every term. There's a lot of components that roll up in their pricing models, and some are hedgeable, some are not hedgeable, and their prices are not going to be consistently best across all terms. So there's different suppliers. That's why if we're pricing with all of top tier ones and some of the best in the business, you just know that if you want to go with the 3-year, you're still getting a very solid top supplier, Engie, or a 5-year, Direct Energy, who just got acquired by Constellation. So you're going to be with a solid supplier, right? So this report basically is just summarizing the prices per supplier, has all the terms and conditions. It'll have your savings over CR, which is current rates. Guys, again, we can go over all this in more detail on a one-on-one basis later, but I'm kind of breezing through this, and hopefully you're able to stay up with me here. So you'll see the savings percentage, your current rate basis the new rate. Your estimated utility charge, right? The regulated utility charge, that's going to be like in California, you got SoCal Edison, right? They are the utility. They're going to charge you to deliver the power from power plant down to the meter base. Then you have your competitive supply side, which would be, say, for instance, Constellation. So you have two components of your bill. So we're going to break it down and show you savings. Overall, we'll show you your estimated utility charges for your budget, then bundled together those two components, and then we're going to give you an estimated annual cost per term based on that new rate times the annual kilowatt hour. So you'll have this report. It's basically a budget report. Okay. Um, Obviously, our teams are going to work in multiple iterations. We're not just going to price it once. We're not going to price it with 2 or 3 suppliers. We are going to take it to the full market that is best suited to serve your energy load, right? And we're going to get all the suppliers we can, and then we'll narrow it down. But each and every time, you're going to see a report like this so that you can see the benchmark pricing as we move forward. So, basically, guys, in the end, it's our unique market intelligence, our timing of procurement, and then obviously forcing the competition, as you see here. We're going to get you that price. We're going to get you the best price in the business. I can guarantee you that. All right. So we're going to move on to the next slide. Brings me to our premier client experience. All right. So Tradition Energy over the last couple of years really made a push and focus to make sure that we're doing all that we can as a top energy broker in the nation to make sure that we're providing all of our clients with the best service possible. All right, not just procurement, not for gas, not for electricity. We're talking anything and everything energy related. Right, all the services we talked about, all the additional stuff that we can do, the team view, our billing, pricing, our tariffs, all the reporting that we can do, all the reports. We don't want to make sure that our teams, including our client service team, handles everything that you need after we sign a contract and get you hedged and get your budgets in place. We want to make sure that post-contractually, all of our team members in our client service division are able to handle all of your needs going forward until we re-engage with one another to look at a renewal, right? And I know I mentioned in the beginning of our presentation that if we're not reaching out to you at least once every 90 days or less, we're failing you, we're failing ourselves. We got to make sure that we're doing all that we can, keeping you abreast of the markets, making sure you're getting the right reports, attending the appropriate webinars. And speaking of webinars, I know I didn't mention this, but if you had a specific topic that you wanted covered, if you would send that information over to me, we may already have presented that webinar and we can send you the link and password. If not, we will pull it. So education obviously is first and foremost the most important thing that we can do for our clients, not only for us as advisors and everybody else that makes up Tradition Energy, but for our clients. And so, 20 webinars plus a year, a couple of seminars, we're going to keep you engaged, keep you abreast of the market trends, and make sure that we're providing you with the premier client experience. Okay. Next. In staying with that topic, basically, we have a team view system. I've mentioned that a couple of times. It's our Tradition Energy account management view. This is where you're going to find your copy of your contract or contracts or whatever it is. You can, track all of your energy usage. We have reports in there. We have energy market price data. Your market research information is going to be housed in here. All of these things that you see on the left are going to be housed in this report. It's basically it's our in-house data management and reporting services. We can charge you per invoice to track all of your usage, do your budgeting and forecasting and all of these other tools, a small fee to be included in this. So it's just a very nice system that, to collect all the data, your contracts, and look at these very cool interactive maps and charts and graphs of energy trends in any market from gas, electricity, and all that. So it's another resource that you would have at your fingertips. Okay. Next slide. So, guys, ladies and gentlemen, I really appreciate you being on the call. And Tony, please share this with anybody and everybody that we missed. But I want to make sure that everybody understands the tremendous value that Tradition Energy overall can provide. It's our unique market intelligence we talked about. It's timing the markets, helping you guys get the right price at the right time, right? Utilizing our technology, our pricing platform, which is unmatched in our industry. Maximizing competition, working with all the top suppliers that are best suited for your business to get you the best price. That's going to improve your overall budgets. Through all of this, we want to make sure that we're taking care of our clients, educating you, providing you with the absolute best experience you've ever had. And I promise you, like everybody else, 95% of our clients saying we're making a huge impact to their enterprise and business. We hope that you've gained something from this. If not, enough information. Obviously, we can have those one-on-one sidebar calls or conversations or schedule another meeting, especially for those that may have missed. But just know that with our experience and our expertise and all the teams that we have equipped here at Tradition, we're best suited to serve your specific industry as we do for hundreds of others in your industry across the United States. So, with that, we welcome any opportunity for a further conversation and opportunity to work with any member on this call. And that's all I really have. It's late and long-winded, but Gary wants to step in. Gary Cunningham, our Director of Market Research, is on from the East Coast, and he'll be discussing with you our mid-year 2020 energy price forecast. Like I said, that went out. We had the webinar, 2 weeks ago? So very good information in here. Feel free to stop him and ask any questions, and we'll take it away, Gary.
Thanks, Brek, and thanks, everyone. So before we get into this, and this is really an in-depth report that goes into the minutiae details of what's moving energy markets around for the next 6 months, I want to take a step back and let's get a better understanding of, I actually saw some questions come in. A gentleman named Steven was asking about, the amount of savings that can be achieved from moving to third-party supply for a multifamily unit. And the short answer is it really depends on the region. California, for example, has a very limited opportunity to shop for third-party supply because of the regulations there. There are some opportunities through self-supply. We mentioned a flat roof, potential for solar, things like that. So there are some opportunities for cost savings, but they won't be from procurement from the third-party supply market because of the regulations in place. You get into other areas such as Texas or Illinois or up into New York and the mid-Atlantic and, sort of Maryland and Delaware and stuff. And we're looking at probably 15 to 20% savings compared to the utility. Right now we are seeing some really opportune times within the markets because of some things that happen. The slide that's on the screen right now is actually a good one for me to talk about here. We are expecting prices to increase as we get later in the year. Tony's talked earlier about some of the economic incentive packages that are being rolled out by the government as an attempt to re-stimulate the economy. And not only that, but what we're seeing is because of all of the depressed demand that happened in the first half of the year, not only do we have COVID-19 happening, which was catastrophic enough, but for us in the energy market, it came on the backs of what was a relatively mild winter, and we really rely on winter demand to sort of soak up a lot of our supplies of natural gas. And natural gas, I realize that maybe it might be a big thing for you guys in the multi-unit space, but that natural gas is used to generate electricity, so it's an important sort of feedstock for our overall conversation. So I'm going to put it out to the group and offer up if there's anything specific that you guys want to talk about from an energy market perspective. Again, the forecast that we have here is really concentrating on the rest of the year, the balance of the year. And that's maybe a tough conversation to have because it's relatively short term. And so I wanted to talk maybe a little bit more about longer term trends and what we're seeing in the market. And what we're seeing in the market from a national perspective, Tony mentioned it, Brek talked about it, is a shift away from dirty resources like coal and towards cleaner resources, whether it be natural gas or, as the media calls it, the bridge fuel, or things like wind and solar, which are more traditional green resources. The issue with those green resources, and I'll admit I'm a closet environmentalist. The problem with them is that their intermittency. What I mean by that is the wind doesn't always blow. I don't know where the folks on the call are from, but I know Brek's from Texas, and he can attest to the fact that the worst days in Texas are the days when it's hot and the wind isn't blowing. And the problem with that is Texas has built a lot of wind generation to provide their electricity. Well, wait, so it's really hot, so everyone's got their air conditioners going. The wind isn't blowing, so we're not generating electricity to power those air conditioners. So that's kind of the double whammy that happens to Texas. We see huge price volatility in Texas. Let's shift out to California. We're in Pacific time here, so I'm assuming there's a lot of folks from California on the call. And
Yeah,
California
we're pretty
suffers.
much all from California.
Oh, great. That's fine. So let's talk about what California's problem is. And it's a problem. I'll put that in lowercase. California's volatility comes from the installation of so much solar. And solar is a wonderful resource. It really is. It does great things for cleaning up the environment as far as our energy sector goes. But the problem with it is peak production on solar is around 1 or 2 p.m. in the afternoon. It sort of starts at around 10 or 11 and kind of crests up. And then by 4 or 5 o'clock, just like the sun, the solar production is waning. The problem is in our modern world, that's about the time, 4, 5, 6, 7 o'clock at night is when folks are coming home, they're turning on their computer, their TV, the kids got the game systems going, you've plugged in your electric car, turned on your electric oven, you've done all the things to increase demand for electricity. But that's right at the same time when production of electricity from the solar panels is stopping, is going away and really retracting heavily. So what happens is late in the afternoon, virtually every day in the California markets, prices for electricity spike way out. And by spiking, I mean during the day, and we're talking dollars per megawatt. I can convert it to cents per kilowatt hour. Actually, you know what? Let's just talk in cents per kilowatt hour. That's what everybody's used to seeing on their bill. So the wholesale market for electricity during the day at noontime, 2 o'clock, 3 o'clock in the afternoon in California trades at around 2.5 to 3 cents per kilowatt hour. That's pretty cheap. It's a heck of a lot cheaper than the utility is charging you, but that's where the wholesale market is. But wait, it gets better. By the time the afternoon comes around and that early evening hours where the solar production is waning and demand is increasing, what you see in the wholesale market is prices jumping up to 35 and even 40 cents per kilowatt hour. Yeah, that's 2.5 to 40 in the span of just a few hours. And that's why what you're seeing is a lot of utilities shifting to a different time of use rate period. And this is really important for you guys as multi-unit, multifamily owners. If you're doing that, pass through costs of your utility costs. And Tony, I think when I first joined, you were talking about the master meter versus individual meters.
Right.
And this can really be a danger zone for you if you have a master meter situation. The master meter, you're going to be looking at your total usage, and you have to be very careful because depending on how and when your tenants use electricity, your overall cost can change drastically from month to month. I'm talking about a double or tripling of your energy bill, your electricity bill from month to month. And if you're trying to build that cost into your rent rates, really difficult to model. So just be careful of those kind of things as you look at properties and you look at investing in units that have master meters. Obviously, if it's individual metered and the meter goes into the ownership or the control of the individual tenant and they're paying their own bill, it's not an issue. But it is still an issue for you for all of that common space that Tony mentioned. So you talk about the clubhouse, maybe you've got a pool on the site, you've got, just the common area, maybe there's a gym in the building, all of that electricity usage. Again, think about the gym. Think about when, they get out of work, they go down to the gym, they're turning on the treadmill, this, that, the other. Next thing you know, your electricity usage in the common areas is peaking just when those prices are peaking. And that's going to really increase your cost to operate the property. So just be aware of those kind of things. Brek and I can talk to the group or individuals who are interested in it about ways to try to look at alternatives there on how to maybe manage some of those costs or offset them on the longer term. But again, because it is California, the regulations really kind of handcuff us on exactly how much we can do to control the energy costs within the state.
Right. And I think to give some context, so even though we are investors in California, we invest primarily out of state. So
Okay.
especially in Texas.
Oh, all right. Well, see, now I've said all that, and now I've told you about your own apartments and homes, but maybe not where you invest. So let's talk about Texas for just a minute. I mentioned all that wind, the volatility that we've seen in Texas, and that's something that we really see continuing. Texas doesn't have a lot of generation being planned to build other than wind and a little bit of solar. And I'll be honest, most of the solar is going to be down in Houston. So unless your properties are in that area, you're going to be stuck with wind resources providing much of your electricity. That's really creating some volatility within prices. And the reason it's volatile is because wind is very hard to forecast when it's going to produce and how much it's going to produce. As part of my role as the director of market research for Tradition, we're monitoring not just the energy markets. I'm actually monitoring wind forecasts and weather forecasts and cloud patterns. And I don't know if you guys have any properties up in New York, but we'll give you a real life scenario that happened 2 days ago in New York City. New York City was headed for a new peak, all-time peak of demand within the city, of New York City proper. And then within about 25 to 30 minutes time, some clouds rolled through and a short rain burst came across a portion of the city, and we saw about 400 megawatts. That's a lot of load come off, and temperatures dropped by 4.5 degrees inside of 30 minutes. That's the kind of volatility that we're seeing in weather patterns. Increasing regions happening. Texas is famous for it. You get some thunderstorms that sort of boil up and roll across and remove a bunch of load. Prices go crazy. Or the thunderstorms don't pop up and prices spike out because demand is really high. It's that kind of volatility. And when we look at contracting for electricity supply in Texas, we really look at things that will protect you from that. Brek talked about longer term. One of the other things that we want to do in Texas is be proactive. We want to look at things before they become due for renewal. As you look at properties for investing, look at what the current contract situation is. Tony, you mentioned it earlier on, right? The first thing you're looking at is, what's the current contract like? When does it expire? Do I have the ability to kind of negotiate my own deal with my own terms?
Right. And one thing I didn't really mention is the fact that, with being part of a larger partnership or being in a portfolio has a potential to also provide much more attractive pricing as well.
Absolutely. There is power. There's buying power. The power of scale, it is definitely brings an advantage to the market. And the advantage it brings, and Brek talked about all the suppliers that we deal with. One of the keys is being able to make them fight against each other, right? Make them compete for your business. And obviously, the bigger the portfolio that we bring them, the more of them the more eager they are to fight for that business. One of the other things that we're seeing is, are really providing value is in negotiating some of the terms and conditions. A lot of suppliers are just going to hand you their standard form of contract. And, Brek's probably experienced this a lot more than I have. And, they hand it over to the customer, and the customer doesn't really know any different and thinks they don't have any options, and they sign the contract. We can negotiate some of those terms and conditions to be more favorable to you. Obviously, the supplier is going to give all those T's and C's that just favor them. And what we can do is help you make it a little bit more of a level playing field, or even to try to tilt it a little bit towards you as an owner to give you more rights and abilities to exercise those rights in the future in the contract.
Can you give some examples of what are some things that can be negotiated?
Yeah, sure. So there's things like swing clause, and a swing clause allows you to change your usage. So you don't know how much your tenants are going to use or how much your building's going to use from day to day or year to year. It depends a lot on occupancy, all of those kind of things. And so we can negotiate a higher swing tolerance. So there's also in Texas, and Brek, the initials are escaping me. There's a special type of contract where even if you have, it's the continuation of service. CSR?
Yes.
CSA, thank you. So we can make sure that the CSA terms, that any of your apartments that go if it's multi-metered, any of the apartments that go empty, revert back to your name, or when a new tenant moves in, it's automatically enrolled with a supplier to make sure that they're getting the best deal possible. And it's a value add that you can offer to your tenants before they move in, that they don't have to worry about going out and negotiating a deal. You've got a good deal in place already. You've negotiated a great CSA and a great rate for them for when they move in. It helps them budget and helps them find your property more attractive. Brek?
That's correct.
Okay, I didn't know if you had something. So again, and thanks, Tony, for giving me a little bit more guidance. And I'm sorry for going on that long diatribe about California. With the California people in the room, I thought it would be an interesting sort of anecdote. The other thing that we'll talk about with Texas is sort of its dependency on the energy markets, not to provide its own energy, but as an economic driver. And so, you know, we are seeing, you talked about some of the vacancy rates and things like that. You know, we saw within the first quarter of 2020 alone, nearly 40,000 jobs in Texas alone lost in the energy sector. We are seeing those come back. Crude prices, West Texas Intermediate is the standard for United States crude oil. WTI prices have really rallied from their early year lows, and we are seeing that going to continue later on in the year. There's a little bit of question mark around what happens when OPEC sort of comes back to producing all the oil that it's capable of producing. But we still think that they're going to look at the longer term value in retaining sort of a lower production level. And that's going to really help bring people back to work within the Texas markets as the energy sector in Texas and the United States recovers. I'll take a pause because I'm going to take a drink of water and ask if there's any questions. I'm also going to apologize if I'm using my radio voice. This is the system where I record my podcast. And so anytime I sit in front of this microphone, I go instantly into my radio voice.
It's all right. Can y'all see me okay?
Yeah. I also got another question. So can you also kind of help the group understand, like, in terms of like natural gas usage, right? So is the energy rates normally more expensive during the winter, or is it more expensive during the summer, that type of thing?
Yeah, so natural gas is one of these things that we produce virtually the same amount of it, where we extract the same amount of it from the ground, virtually the same all year round. Lately we've been on the upward trend. We drill more holes and drill more holes, but it's pretty steady. But usage of it, especially when you get from a national perspective, it's extremely seasonal. So in the summertime, no one's using natural gas to heat their homes. Well, the sun is heating their homes. The air is heating their homes. It's naturally warm. So what are we using our gas for? We're using our gas to generate electricity to cool our homes. We're using our natural gas for industrial processes and for some commercial processes like restaurants and things like that, laundromats. But now let's shift to the wintertime, and maybe not in Texas, but I will tell you that I'm East Coast, I'm Northeast, if you can't tell by the accent. Up here in New England, when it gets cold, I mean, the thermostats come on and the thermostats stay on, and we're using a considerable amount of natural gas. Let's put some numbers to it. In the summertime, for heating demand and those commercial spaces and even the power sector spaces, we're using about 60 billion cubic feet a day of natural gas. Seems like a big number, but we're taking nearly 90 billion cubic feet a day out of the ground. So that's an even bigger number, right? But now let's look, we're taking 90 billion cubic feet out of the ground. You go to wintertime, the heating demand alone, just to heat people's homes across the country, can spike to 120 billion cubic feet a day. So that's where what a really important part of the system is natural gas storage, where basically we take all the extra production we have in the summertime, we stock it away, like the old fable of the grasshopper and what is it? It's the grasshopper and I obviously don't know the fable. The ant and the grasshopper, that's what it is. And so, we're good ants, and we're storing stuff away all summer long because we know we're going to need it come winter. And so we've actually got really good supplies right now as we come through summer because of that mild winter and because of the reduced demand that we had earlier in 2020. And we're looking like we're going to be in good shape. The problem is that we basically, when oil prices collapsed earlier in 2020, drilling stopped. And this is where all the job cuts and all that happened in Texas. Drilling activities really cut back. And so because of that, the wells that we should have been bringing online now and into, September and October for production later in the year aren't going to be there. And so what we expect is natural gas production to continue to decrease as 2020 moves forward. And that's going to make prices this coming winter really volatile. Now, that might not really impact Texas because I don't know how much a lot of heating of properties you guys use, heating demand for natural gas. And I will also tell you that there's very limited ability to shop natural gas in Texas because of some of the rules there as well. But I will tell you that you should expect a lot more volatility in natural gas prices going through the end of 2020 and into 2021 and throughout it.
Mm. Okay, thank you.
Is there anything else?
Nothing. Yeah.
Yeah, so this is basically a high-level overview, and the document itself is again 30 slides long, and so I won't go through this all with you. I believe you guys have a copy of it. I'm happy to speak to any specific region. We can go into the Texas regions if you want, but you see there that what we're seeing from an electricity perspective is about a 10 to 15 to 20% increase depending on where in Texas you are from where we were in the first half of the year. Again, these prices here, you see them $19 to $21 in the Houston region, and the South region going from $18 to $21 as well. That's dollars per megawatt hour. Easy thing to do is just move the decimal place over and see that that's the 18 is 1.8 cents and the 21 is 2.1 cents. Keep in mind, this is for the wholesale commodity itself and not what you would see on a retail contract, which includes all kinds of other services and components included in the price.
So, you know, with a lot of investments, our investments in different areas of Texas now, in comparison, let's say Houston, Austin, and Dallas, is any one area more have more expensive utility compared to another area?
So if you'd talked to me a couple years ago, I would have said hands down Houston. But what we saw starting last year as this market retracted is Houston and so ERCOT North is where Dallas would be. That's where you're going to talk about Dallas. Those two regions kind of retracted with the overall wholesale market. But Austin, which is a regulated utility, those prices aren't determined by this wholesale market. They have other long-term contracts. Those long-term contracts were really advantageous a year and a half, 2 years ago. But now that the market is retracted, Austin's prices are actually significantly higher than the rest of Texas. And there's a lot of call for Austin to deregulate just because of that. Now, I will tell you that I don't think it will deregulate. I think it's very well seated. But that right now you're seeing higher utility costs in Austin than anywhere else in the state of Texas. Brek, would you agree with that, or?
Agree with that. And San Antonio's probably one of the next higher areas, and it's also a regulated area of Texas. When I say regulated to everybody on the call, there's no opportunity for a competitive energy rate. You have to pay what the municipality offers you.
Right. I think that's pretty much similar to what we have here with PG&E.
Correct.
All right, so let's talk about some of the renewable opportunities that are in Texas. Right, Texas does have significant renewable infrastructure investments available, and so again, this is one of those where it can be a value add to your tenants as you look towards occupying some spaces and competing with other buildings in the region. Right, maybe being able to procure a 100% green energy supply, which can add just about 1/10 of a cent to your cost of energy, 1/10 of a cent per kilowatt hour. And you can advertise that your property is 100% green, 100% renewable energy sourced, and that might have some attractiveness to a certain tenant base. So depending on where your demographic is, it's something that you should really consider, and it's something that can be part of the competitive process. We can go out, we can take the properties out to bid. This is one of the things that, again, Tradition's iterative process, pricing process really helps with. We have all the suppliers bid it as what we'll call brown energy or regular energy, and then we also have them bid it as green energy. So this allows you to put an apples to apples, side by side comparison and say, well, if I want to go green, it's going to cost me this much extra, not just per kilowatt hour, but per year, per month. And this way here, you can decide whether or not it's an investment you want to make because you think whether or not there's going to be a return on that investment with your tenant base.
Mm-hmm.
But you're making all the suppliers compete for the right to sell you that energy and making sure that you're getting the best possible deal and the best possible terms.
Gary, can I go ahead?
Yeah, so do you know if for the Fannie Mae Green Program, which it used to be only for water utility reduction, but now also includes electric components, right? Do you know if the fact that it is using more green sources contribute to the qualifications?
I am not entirely familiar with the Fannie Mae program, but I will look into that and I will have Brek get back to you with a firm answer on it. I don't want to give you a guess.
Cool.
I will tell you that green energy purchases do qualify for most LEED programs. The EPA, so that depending on what type of a green program or green product we purchase for you, it would automatically go through the EPA's building reporting system, the building benchmarking system. So all of that kind of stuff. And I think that's where Fannie Mae feeds off of. So, but I don't want to guess. I want to give you a real answer. You guys deserve the right answer. So we'll get back to you on that.
Thank you.
All right. Anything else?
No, I think one thing that we forgot to briefly talk about is the hub versus zone type of pricing, because
Sure.
that caused me a little bit of confusion when I was comparing shopping prices.
Yeah.
I didn't realize there was actually two different prices that I had need to consider.
Yeah. So in the Texas market, there's basically two pricing points within each zone. And if you can just go back to that summary slide for just a second. I just want to speak to it for literally 1 second. Oh, there we go. So these prices, what we forecast is a hub price. So the hub price is, and the reason we do this is because we model basically the generation dispatch. That's how our models are designed, because we're very difficult for us to model exactly how much energy people are going to consume. So it's easier for us to model how much the cost of generation is going to be based on what the generation infrastructure is. That's a long way of saying that the hub price represents what the generators would get paid for the energy. The zone price, which is the other thing that could appear on the contract, is the price that load will pay. The difference between the two in Texas is often referred to as basis or congestion. We use the two terms interchangeable there to represent the difference between the hub and the zone. It is not accurate to say that hub is always cheaper than zone. They go back and forth, and it has to do with whether or not a generator is really needed or is running anyway, whether the demand is near a generator or far away. There's all kinds of different things that can change how those two numbers relate. I will tell you that in years past, we had large differences between hub and zone. Just last year and actually into early 2020, in ERCOT West, the western markets out towards basically the Nevada border and Arizona border, that region suffered really strong constraints on their transmission system. And because of it, the hub to zone basis, that congestion cost was actually more than the energy itself. It was a real problem, a real conundrum. And so what they've done, what the Texas grid has done, has made billions of dollars worth of investments in new transmission infrastructure. And they appear to have fixed it, because we haven't seen it since about the middle of March. That's when it seemed to have cleared up. Now, the true test is going to be later on this summer in August, when that area, the Midland Texas area, gets truly hot into the 110, 112 degree range. And we'll see whether or not that transmission infrastructure can meet the call. But for now, there's very little differences between hub and zone. And so that's another value add. If you as an investor looks at two different offers, and one's to hub and one's to zone, well, how do you know which one is the right thing? Well, that's where the experience, expertise, and knowledge and in data and information that Tradition has can really help you make an informed decision. Because at the end of the day, that's really the goal of Tradition. And Brek talked about it. Our goal is to educate you to a point where you can make the most informed decision possible, not only on what product to buy, but when to buy it, how long to buy it for. All of those things, we can really help you make the decision that's best for your organization.
Right. And just for context for the rest of the people, so, basically the difference is whether, so electricity is usually two components, right? The generation and the transmission of it. Okay, so hub versus zone is more of are you pricing it close to where the electricity is being generated, or are you pricing it at the point of delivery? So meaning it has finished generating, finished transmission to your area already, right? So these are two different prices, and you need to make sure you're comparing apples to apples when getting different quotes.
Tony, you want a job? Because you did a better job of that than I did. That was a perfect explanation. I'm going to steal that, by the way.
Well, see, that's the thing, so it's funny. Being an active person, you have to know way more than you think you would need to know. And as a passive, you don't really care. You just give money and then expect money back, and that's all you had to worry about. But I enjoy these kind of things. So cool. Okay, well, thanks very much for that explanation, Gary, for giving an overview of what it looks like. So it's definitely, things that move up and down, but having the ability to lock it in as a portfolio. So this is something I talked to Brek before, because I also know other multifamily operators, and frequently we would go in as a group. Within a group, we would, we have maybe 10 to 12 apartments between us. And we would try to negotiate pricing as a larger group. And that gives us significant advantage, right? Sometimes even an additional 5 to 10% off of our energy cost, right? Also, speaking with brokers and having them shop the best rates for us, I mean, from the rates that I've seen, it could be as much as a 15 to 20% difference. So using someone like Tradition Energy makes a huge difference in terms of what your residents are paying, right? And all these expenses that the residents eventually have to pay is a function of how much rent can you increase. If you're not able to negotiate a good rate and then their utility bills goes up by $20 a month, well, that's $20 a month that you're not able to raise your rent by, right? So all these contribute to the bottom line and the final pricing of your apartments. So it's very interesting. Every little thing you need to kind of know it inside and out to make sure that you're able to extract the most value out of the apartment complex and bring the most value for your investors. So yeah, that's why you'll see me every little thing about water, utilities, you name it. We're even now renegotiating trash pickup. So because in a multifamily business, because of the cap rate, everything that you can save is amplified, right? So if you're able to save $10,000 a year, that's equivalent to $200,000 of extra asset value that you can bring. So yeah, don't underestimate these.
That's right. The idea of aggregating is obviously something that would help drive the cost down and affect your bottom line. And I'm sure you're aware with who Blackstone is, right? $500 billion in assets. So I'm in the process of working on their largest industrial portfolio in Texas. It's in the Houston, Austin, and the Austin part that's deregulated is very small. And then all of Dallas-Fort Worth, 25 million square feet. And we're talking 200 and something accounts between 28 different legal entity names. So if you had like yourself, 10, 12 different ownership entities with staggering end dates of their existing contract, we're pulling all that together. Everything is not always aligned, and that's something that we can obviously analyze and create a staggered start for all of your assets and have them all co-terminate at a set time to get you to that, that better price point. based on the aggregated load. And that's something that this Blackstone and their industrial arm is extremely pleased that we're able to do to give them better purchasing power. And like you mentioned, 5, 6, 7%, we're seeing 10% better pricing by aggregating versus individual contracting.
That's a very impressive deal.
Yeah. And then
dinner's on you when I go.
I mean, it sounds like 5, 10% could really impact your revenue in terms of your investors for their properties. And obviously that's our goal, is to get you that best price. And, Reliant Energy is another great example. They just went through this whole process with 50 plus assets in your type of business. Obviously it was a really, really good deal, and everybody got the best pricing, and but then it was all broken apart into 50 different contracts. So no matter how large or how small, if you guys got opportunities, you want to pull those together, you'll get better benefits out of it. And running it through our pricing platform and our teams, and timing the market, and educating you on when to do it, it's obviously going to give you the best bang for your buck.
Right. Yeah, and for the investors here, same thing. Feel free to come and reach out to me when, for your existing assets. If you guys acquire new assets, we can absolutely team up together, even though we're different syndications. We can absolutely team up together and get pricing on as a bigger portfolio. All these things could work.
Absolutely. We do it every day, and be more than happy to analyze any of the assets that you guys have that are in deregulated markets. Like I said during my presentation, if you have assets in regulated markets that you wanted us to review just to make sure you're on the right tariff and not being overcharged, or any of the other services that we mentioned, those are items I would welcome. So funnel those through Tony and myself, and I'll get those up to my pricing desk and teams and Gary. And if we need to have another call, one-off call, or another team call, please let us know, and we'll get it on the calendar.
Cool. At this time, we'll open up for any questions that you guys may have. Okay, so I'm gonna be sending out these slides that Brek has presented, as well as our original meetup slides. If you have any questions, if you would like to contact Brek, please just let me know. I'll definitely put you guys in touch. I'll also have his information in our meetup slides that I'll share with everybody after the call.
Sounds good, Tony. Appreciate it. Thank you for everybody, ladies and gentlemen, on the call. And thank you, Gary, for being up so late after a very long week back in the office. We appreciate it.
No problem, guys.
All right. Thanks, everybody.
Alrighty.
Have a good night.
You, and good night.
Bye-bye.
Thanks, Tony. This is great.